access to it, and we are live. So I'm going to go to share, make sure I'm sharing the right thing. Portion, ta-da. So as you guys know, this is the Super EZ beginners class. You guys have a really good idea of what this kind of looks like. If you have questions about the things in the advanced group, if you have questions about the trade manager or the strategies released in there, please keep those to the morning calls and not to this call. So having said that, let me mute everybody just in case. Mute all. There we go. They're still allowed to unmute themselves, but this way you guys can talk. As you guys know, Forex is a high risk activity. So Forex is a high risk activity. Everything we discuss on this class, in this class, is meant for educational purposes only. I am not your attorney. I am not your tax advisor, your accountant, your CPA, or anything along those lines. This is all educational purposes only. So do not trade what you cannot afford to lose. Obviously, some trades come with some drawdown. So if this is your last $100, don't put it in the account until you truly understand what you're doing and how you're doing it. That's kind of it. That's the entire level of disclaimers. Any questions, comments, concerns, all that good stuff?
Now
there we go. I think I might have just muted you, Derek. Sorry. Hold on, let me go back to Derek. See if I can unmute you. There you go. I think. Nope, it won't let me. Hey guys, if you have background noise, please.
I was just saying, now I know why you put on the mute.
I do it all the time. Well, I'd rather have that open dynamic, but you guys have to manage your own lines. So that's kind of goes with the territory. So you guys are allowed to unmute, but if you have background noise, please keep it muted. So first and foremost, as you guys know, you should be able to see the simplicity screen. I went ahead and took it off of the live broker that I'm kind of testing it on. I had that hooked to the account this morning. It's growing pretty well. I'm just using a 0.01 for every $200, comparable to what we do in Forex in the indexes, and it's growing pretty well. So not too the losses are manageable, and the management is definitely something easy to do. So for those of you guys who don't know, this is the new system in terms of SuperEZ, kind of does it all. This is the bottom oscillator, which I haven't had on until today. My understanding is there were some issues in terms of the websites and the coding and the licensing and the back end stuff, which Donna is working her butt off, and so is Pat, to make sure everything is working well. So having said that, with this bottom stuff, I know Pat teaches his own way. So I'm going to say again that everything we discuss is not meant to be, against or in conflict with anything else anybody else in the group teaches. The whole concept is just to teach you different ways to see the market and different ways to have success. So having said that, this is the 30-minute time frame. I'll right click and I will go to the settings so you guys can see kind of what I have it set at. You guys know that the arrow size isn't getting much smaller, as small as I wanted it, but that's okay. The trend period I have set to 10 or 11 because I like my odd numbers. I just got it loaded on this broker, but my live account, I'm using it on 11. So it's rather fast in general. Remember, these are just Fibonacci zones. That's all the hot zones are, is still set to 4 hours. And that, of course, means the support and resistance is set kind of in between there. So that's how that's all set up. Having said that, does anybody have any questions, comments, or pairs in terms of this specific indicator? Or we're going over to the charts and we're going to kind of mark up some naked charts. Anybody at all?
I have a question.
Hey, who's I have a question?
Eka.
Hey, Eka. Oh, see.
Hi. Yes. So with this being a new system, I'm definitely trying it out. I'm getting my feet wet. I think it's always, especially with being new to Forex, it's always a little bit, what's a good word, tentative, because I sort of look at it and I'm like, okay, well, it says that everything is a good trade, and there's still that little hesitation, like, but am I sure? Like, how do I know? So I guess my question is just what has been in terms of your success rate? Have you sort of been able to consistently take trades? Because for me, I'm always checking the 15. Okay, check the 30. Okay, check the 1 hour. Okay, maybe compare it to the triple arrow system. And, obviously, I'm sure all of that is a little bit more cumbersome than it needs to be.
Well, I think that's a really good question. So a lot of us, including myself, if you have background noise, please mute yourself. Donna, make sure whoever's not muted is muted. I'm going to mute you real quick, Eka. And then when you talk, you can unmute yourself. But in terms of checking multiple timeframes, what I have found, especially with the triple arrow system, or I'm sure would be comparable with this system, is if every time frame is telling you to buy, all that's telling you is that every time frame is pushing down. So we don't want every time frame to be in alignment. Like even when I first started out with the company, obviously this is a reversal system. So I was trying to cross all my T's and dot all my I's, and I thought that that would be the best case scenario. But that's turned out to be in actuality the worst possible case. So if you're trading from the 30-minute time frame, you can check one time frame above or one time frame below, but you don't need to check every time frame. And oftentimes when you find every time frame lining up, it's only because price has been pushing down so hard. You've got a few pullbacks along the way, but it's pushing down. So we don't want to fight the avalanche that's obviously pushing down, tons and tons and tons and tons of power. We want to just either catch the pullback because it's a counter trend system, right? Or we want to go kind of with the direction of the trend. So one of those two are what you're looking for, best case scenarios. So in terms of your other question, what I've seen is the market is moving very fast. So here, let's go to the 1 hour. The 1 hour is probably the highest I would go on this, and the 1 hour is pretty smooth. So you can see the times it repaints, including here. I'll drop a vertical line so you can see that kind of round dot, and I'll hit my magnifying glass to make it a little bigger. You can see that this repainted. Now, granted, this time I was probably asleep, so I definitely would have missed this. But as you can see, even when this happens, it goes against you. And this is a slow moving pair grounded, but what, less than 30 pips? And depending on what your take profit was, in theory, it should have been hit pretty well. So the 1 hour for me seems pretty safe. The only conflict I have with it is that if I hit Control Y, and I'll zoom, I'm going to keep it kind of ugly on purpose. Look how many signals you actually get in so this is May, this is the end of June. So this is 1, 2, you had this right here, which repainted. So that's 3, 4, 5, 6 signals in 6 weeks. So you don't get as many signals. Whereas if we did the same thing like on the 30-minute time frame, again, it's going to be pretty choppy and ugly. This is later in May, but you're going to get a lot more opportunities, granted, a lot more inaccuracies. So this one repainted, this one went for you, but depending on how your stop was, where your stop was, odds are you got popped out because my stop would have been at this lower low and I would have get knocked out here in a loss before it gave me the win. But in general, you'll notice most of the wins are wins. And again, if you have any set of rules, such as break of a trend line, you need other confirmations. And now we've got this bottom indicator, which I'm kind of talking about per pat, but you can use really any oscillator that your eyes see best. All this is kind of taking accumulation data from the lower time frames and the higher time frame to give you an idea of what those time frames are doing. So when you get a sell signal and they're both in seller's territory, it's a slightly better signal. But then again, this was a buy signal. They were both in buyer's territory, and this stayed in buyer's territory and didn't necessarily equate to a buy. So this is something you can kind of use or not use, but that's how I see the market. Looking at an individual time frame is not necessarily a bad thing, because if you test this, especially since you're in the other group, you can test this with that visualize feature too, and just see per the management that you're trying out how many trades you would hit at close. This would hit close to break even for a loss or a minor kind of negligible loss, whereas most of your wins would hit well more than enough. You're talking 5 to 1, 3 to 1, 2 to 1 at the very worst case scenario, but usually not any less than that if you just scroll through, and that's on the 30-minute time frame. On the 1 hour, you're looking closer to 7 to 1, potentially 10 to 1, but that just takes a lot more loose management and letting your trades run, which in today's market with so much going on, like with the pandemic and then just huge news and China trade deals and all the stuff in London and all the stuff going on around the world, the violence, the crazy. I don't want to be in a trade for a week. I don't want to hold this position because in this moment, there's so much that can happen. I don't want to pay the price for, hey, I was taking this, I took a re-entry and then I went, 130 pips against me. It's fine, for risk management, but not for a way to trade. I don't want to be in the market long term right now. right now. I'd rather be kind of in and out, control my funds a little bit better.
Yeah, I think okay, good. I think that's sort of what I'm sort of dealing with right now because like I said, it's still new. So I seem to like the 15 and 30-minute time frame, which is great because you do tend to get more signals. But what I sort of, because I prefer long-term trades. I like 4 hours, I like dailies, and I'm sort of coming into conflict in terms of, yes, the market is not doing what it needs to do. We've got a lot of news and etc. that is sort of throwing off that stability of, hey, this looked great, but then something came out in the news and it threw it all the way back. So with these trades, I'm dealing with a time frame I'm not totally comfortable with, and I'm trying to say, hey, if this is a good setup on the 30-minute or the 15-minute, what role could it play into the 1 hour or 4 hour? So far, I'm sort of cutting it off at the 1 hour. I'm like, hey, if I get in the opposite zone on the 1 hour, if I get a reverse triple arrow on the 1 hour, I'm assuming this thing is done. It's time to hop on out. But it's definitely just been a little bit of a like, okay, I guess when do the wheels come off, so to speak, because I'm not great with shorter time frames. So with the 4 hour or the daily, it's very simple in terms of you get out when you basically run out of as much steam as you can get. Whereas with these ones, it's like, well, hey, am I walking away from a 4 hour ride after 10 minutes, or am I jumping into the last 5 minutes of something that was already good, which is, I guess, where the little hesitation and fear and checking all the other time frames comes into it.
I guess I would have a lot to say about that. Somebody in the chat said higher time frame, more terror. Yeah, technically, but I'll say it as somebody who has managed to find some success in this industry. There's just a lot going on in the world. So I don't know what your financial situation looks like. If you have the money to say put $500 in twice a month, if you have the budget to put $200 in twice a month, or if you have $20,000 in the account that you're looking to risk, because remember, it's not just what we're going to grow, it's what we're willing to risk. So for me, you can go for a smaller percentage of gain for a longer hold. And for the most part, it's still going to be effective. Like for most of my trading career, it's been mostly the 1 hour, 4 hour. I scalped a little tiny bit in the beginning, and I scalp a lot now only because right now is not the time. If you don't have a position trading account, the spreads are going up 10 times the amount just based off of some crazy thing that happened in China. The spreads are going absolutely nuts. The news spikes things instead of before where it spiked things by 30 or 40 pips. Now it's spiking things by 100 to 200 pips. It's the dynamics are different. So the first thing I would say is it just really depends on what your goals are. If you're going to maybe look to compound it by 3%, 2% per trade, which isn't a bad way to trade. It just also means you can't micromanage it. So if you took this trade, for example, okay, if you took this exact trade, this is right before market opens, you're going to pay all the swap fees. You have to be okay with that and not flip out, right? And you have to be willing to hold this. But this is even the 15-minute time frame. And notice that if you were trying to hold for the whole move, you have to hold for the entire next day, and either A, until you break the 50, right? Or until you get the first sell signal, which was here. So there's 1,000 ways to do it. And like we talk about in the morning classes, everyone is so concerned with catching this huge 100 pip move, but you'd be surprised how many very well-versed traders, they could care less about this move. They're very happy with their very consistent, they're very stable 10 pips. They're very happy with they know how to get 30 pips, and that's it. They know how to do it effectively with enough of a high accuracy ratio that this move is where everyone gets greedy. They get desperate. They get hungry. They second guess themselves. So they make psychologically and emotionally poor decisions trying to go for everything versus saying, hey, my strategy, my rules call for this. I only need this much of this trade. I don't need the whole thing. I just need this much, and I can wait for the next setup. I only need this much because, guys, 10, 20, 30 pips compounded accurately in weeks, okay, is a life-changing amount when your accuracy is good. In months, and even if your accuracy isn't great, fine. So what? You only hit six figures a couple of times this year. So what? That's not the end of the world. say you only hit 6 figures once this year, you did that part-time at home. If you did it 2 or 3 times, I mean, that's more than some doctors make after malpractice insurance. So you're doing pretty darn good. So I think that's the most I think I could say is if you're looking to stick with the smaller time frames, make sure the 15-minute is in the same direction as the 30, or the 30-minute is in the same direction as the hour. But keep in mind, either signal can technically, you can get this a great signal 15-minute time frame, and here we'll drop a line. Oopsie. Let's see. We'll drop a line right there. And that was a reasonably good move, not a perfect move, nothing fancy dancy, not perfect. Oh, we can't use that one. We'll have to go to the current history. Current history. Let's do this. 15-minute time frame. Let's find a kind of a smaller move so we can discuss it fairly. Let's take this one. This one is still a measurable move, meaning that it moved enough for it to count. Yee, guys, that's my magic mouse going crazy on Zoom. So measurable move. That's 35 pips. Not a bad move. That's a really good move in general. And that's, again, late. So that's after you got the signal. It's late. And it's totally reasonable even to get that 25 pips. So if we drop a line there, there's a good chance that a lot of the signals you get aren't going to be on other time frames. So then you're going to spend a multitude of time, just a great deal of time, second guessing yourself. Oh, that's right. This indicator deletes all the vertical lines. That's not going to work. So I can't do that. But the point is it's you're going to miss out on a lot of things. Always second guessing yourself versus saying, hey, I'm going to trade off of this time frame. Instead of looking for other time frames of this indicator to agree, maybe say, hey, if I broke a trend line, hey, if I have an engulfing candle or a doji candle, or hey, if this happened at support, right? If this happened in a zone, Pat calls this a hot zone. So if this happened near a hot zone or near structure, or broke a trend line, or has other confluence, a fresh crossover, our MACD, ADX, whatever your eyes see best, use other confirmations versus trying to get this to line up with every single time frame. That, to me, having a set of rules that you follow would be far more effective.
That sounds 100% accurate and smart. And it sounds like something, because like you said, compounding would be so much better than trying to, because it's definitely works your mind, because you'll get lucky on some of them and you'll think, okay, I've sort of got this, I know what I'm doing. And then you get the other ones where you're in it for an hour or two and you think, hey, I'm doing great, I'm zooming in there, and it just bucks back on you and you're like, well, I don't know anymore. So I think what you're saying is pretty accurate in terms of, if I can just get the 20 to 30 pips, then it's good to keep repeating that and compounding.
That's the most, otherwise we're going to drive ourselves crazy trying to catch this every move. Plus, we're probably going to get knocked out with management. We're probably going to get knocked out with protecting it. We're going to second guess ourselves on this one. So the one time we let it run, we're going to beat ourselves up because of this candle. And this is a slow moving pair. This is what I mean when I say the news is going crazy. This, from what I understand, is a China trade thingy. And that's 60 pips on a pair that didn't used to barely move 40, 30 pips in a day. And that happened in a 30-minute candle. This is the reason why I'm kind of against super holding and staying in the market longer than we need to, because this is just giving back. Whereas like having a strategy that either gets you a re-entry or going for a handful of pips is still kind of I think, a little safer, at least for me. At least it doesn't.
Yeah, I like that. I think that's something that I'm definitely going to start employing, because I think that was just the big thing, was that the transition. And one thing that I've definitely learned doing this is that different strategies give you different types of trades. And it's sometimes funny, because I don't know if that's accurate to other fields, but with this field in particular, if you get a signal in a certain system or a certain set of rules, it's easy to think, oh, well, this should obviously translate to this other thing. And if I combine the two, hey, even better. And what works on the 4 hour and the daily doesn't necessarily do the same thing on the 15 to 30, which I like. I'm getting used to them. So yeah, I'm definitely going to start trying to be more consistent in terms of just, hey, 20 to 30, it's good. Look for another one, because it does, it gives you enough, I think, at that time frame.
It gives you enough. And if you have, like, for example, you took this trade, if your stop it as whatever the most recent high, okay, just keep it really simple and have other rules. Don't look at necessarily this strategy for more validation on other time frames. Look at other confluence with more indicators or structure, preferably naked, to do it. So
Okay, that helps a lot. Thank you.
you are welcome. And thank you for stepping up. You're becoming a joy. So I super appreciate you.
You're gonna hear a lot from me. Don't worry. You'll get sick of me. They'll be like, ugh, someone else, please.
No, it's okay. I was that person too. So I love when people like that come in because I know exactly where they're going. Not always, but for the most part, I know people who are that hungry. They tend to get.
Oh, good. That's good. Okay. So thank you.
You are welcome. Hey, real quick, the people in the chat, thank you, Derek. My sound is good. Clearly, I'm having a full-blown conversation with somebody. And the gentleman, I think that was, who was it, who said, I'm not recorded on YouTube. I promise you, it's live on YouTube. So pretty sure, I believe Miss Donna is managing it. So she can drop the link for this on YouTube. So looks like we're in a scalping market, Wendell. I kind of feel like we are in a scalping market, at least for me. Because I don't care if you have $500 or if you have $250,000, I'm not willing to risk it on some bonehead's opinion of someone's perception of what's happening in Hong Kong. And that's literally what you're deciding to do when you're holding it. No, if you're like a professional trader who gets a stock, exchange kind of license, they're legally allowed to only to get like 1 or 2% or some insanely small number a year. And you're trading on millions and billions of dollars. So you have a very tiny amount of risk on an enormous move to hold and wait for it to go down, like something on that the Big Short movie. That's fine. But if that's not what you're doing, looking to hold against all odds until gold finally drops again because the economy changes, then your best bet is still kind of in and out. The less you're exposed to the market, the more likely you are to win and lose less. So just my 2 cents. All right, any other questions, comments, or pairs? I know there was quite a few signals called in the groups. I know that the signal in the groups are going super well, and that's mostly thanks to Elvis. He's kind of a beast at signals. I'll give him that. I don't understand his strategy. Definitely differs from mine, but he is definitely a beast at signals. I would be a fool to say otherwise. So,
Hi, good night.
okay, hey Sam, how are you?
I am good. How are you?
I'm fantastic. How can I help you?
Okay, I'm new to the Signals group. Been
All right.
a month, 1 month in with Super EZ.
All right, awesome. Well, welcome.
And I'm trying to understand a couple things. Okay, on your chart, is this a moving average you have along with the smiley faces?
Yeah, the smiley faces are part of the simplicity. I, even for being a girly girl, did not decide that, but my daughter even thinks it's funny, so we'll go with this is just the 50 EMA. There's a few things that I find key for me to trade with, and the 50 EMA is one of them. I'm pretty partial to the 8, 33, the 3, the 18, my MACD, and the ADX. Like every single thing I do is based off of those things. You can add and take some trend lines and add and take some fractals or parabolic SARs, and that's literally the beginning, middle, and end of every strategy I have all together.
So how do you use this along with the simplicity system?
So this is the simplicity system. How do I use the 50 in conjunction?
Yes.
So for example, like this one right here, we broke above the 50. We've got kind of a tweezer top in terms of candle formation. We retested fair and square. So even though we don't get a technical signal for until here, I have the opportunity to take that trade here. And then the same thing. So with the sell, depending on the pair I was trading and the alerts I had set up, the second we cross back over, rather than waiting for it to hit this lower low, I would probably have been out somewhere around this range. So how I use this in action would be, it limits my losses. It doesn't perfect them, still not perfect, but it will minimize them at least to a manageable extent. And it will help me possibly get in faster or more accurately. And kind of, I don't see it on this chart. This gives me more confluence. So it made a lower low. I'd be a little hesitant. I definitely want to see it start making higher highs or break a trend line. But we've got an engulfing candle. We broke above the 50. We broke a break structure. So I would see this as another piece of evidence. So if you've worked with me for any amount of time, you know that for the most part, I'm just rule-based. I have a checklist level of things of, okay, I've got 13 possible things on this chart. I need to hit at least 10 of them to call this a valid entry. If I have at least, whatever amount out of whatever amount available checked off, then I can say, hey, this is a reasonable trade to take. I take my trade and manage it accordingly, so that I use it as a piece of evidence. And like this kind of choppy market where it just is, this is NZD USD 30-minute time frame. It's kind of a mess for a handful of days. Technically, it won, but depending on your trading style, so if you were trading 10, 20, or 30% on this trade, to let this hold like this, time is money, as they say in business, and to hold this for 3 days in this market, like I said, is not my favorite thing to do. If I was swinging, it would be a different topic. But for today, this summer in this market, I'm going to see this getting stuck around the 50, and I'm going to get out somewhere around this 50. So this one I probably wouldn't have worried about. We didn't really close too much. I mean, this is a technical close above the 50, but it kind of wicks up. We're still not really crossing even this higher high. I'd probably still trust it in around here. But by the time I see this anywhere in this area, I'm out. I'm done. I don't have to hold it for 3-4 days to watch it just go for and against, which also means that money, that leverage, that margin in my account is free to do other things.
Okay. You mentioned something about the short trades. I'm actually trying to learn how to trade the short trades. I think initially I was doing the 1 and the 4 hours. And I was in a trade today and I took it at the 15 minutes, but I think I set the stop loss wrong and I got knocked out. I think it was the NZD JPY.
Okay. And you entered this trade today?
Today at 15 minutes. And I set the stop loss based on the 15-minute chart. And I guess I wasn't supposed to do that because it knocked me out. On the 15 minutes, I was nowhere near my stop loss. But when I saw that I was knocked out, I went and I looked up and I saw that the time frame was actually, the candles had moved further on the higher time frame than I was actually looking at. So my question is, so do you set, even though you're looking for an earlier entry, you have to set it based on the higher time frame?
I'm not a big fan of that personally, and not to say it's a bad way to be. I'm just not a big fan of that personally. So what time did you take it? I assume you took a sell?
Yes.
Okay, so
this was around maybe 3 o'clock or so, 2, 3
Eastern time?
there. Yes.
Eastern time, so that would be what, maybe here or so?
It was right around the hot zone area. And then I noticed that the candle started to almost go sideways. It didn't start out like that, but then it ended up going like that. But then my stop loss was like way up at the 69 something on the 15 minute. But yeah, I got knocked out. So I didn't understand. I was trying to do the shorter ones because I wanted to I guess figure out how to trade the shorter ones. And so I figured, okay, if I come in at 15, I could set it at 15, I could get out quicker, but that didn't work. So I don't know, maybe I'm doing it wrong. I mean, clearly I did something wrong. So I just want to know how to do that. If I'm trading the 15 minutes or the 30 minutes, how do I set the stop loss so that I'm not knocked out?
Okay, so if I had taken this trade, so keep in mind, this trade came in, this morning. It pulled back for, a little bit. And then obviously, so even if you got in at the latest part, like after the signal, oopsie, silly me. So even if you had got in at the latest part after the signal, let's go worst case scenario. In total, it only moved 13-ish pips, not a whole bunch, not a fast mover. But if you got in, just assuming you got in, hey, someone's got some background noise. I'm gonna mute Dwayne and I'm gonna mute. Well, Sam, I'm gonna keep you unmuted.
Okay.
So if you got in here, I mean, the only valid place for your stop loss to be for me, would be at bare minimum above here. I mean, at very bare minimum, but better case scenario would still be above this kind of super easy dots, and actual trade would have it up here, because this isn't a fast mover. It's not a huge trade. So even from here to there, kind of a heavy risk. goes with the tier. So it's a 50 pip risk in all fairness. Odds are, I don't know what broker you're trading on, but the odds are you got wicked out either by the spread when the market changed over, because it gapped down. But keep in mind, the spread is going to widen exponentially. So if the spread widens, it could have, like, I don't know, what time did you get knocked out? Here or at the 5 o'clock crossover for New York?
I think I got knocked out. It was after 5. Probably
Like-
probably 4:30-ish, close to 5, somewhere there.
And
And it
what,
happened so quick. I mean, it it was quick. It
what
must have been during the switchover because it was like I looked at it 1 minute and it was a low, like $4 and something cents in the negative. And the next minute I looked, I was out. I was like, wow.
well, what broker were you on?
I use I think I was on FX Choice.
FX Choice doesn't have high spreads, do they, guys?
No,
I don't think so.
but their leverage is far from the best.
So I don't recommend FX Choice primarily because their leverage isn't very good. Otherwise, it's a great, I mean, it's a fine broker. I don't want to say great, but their leverage just isn't high enough to do what we're trying to do. So 200 to 1 is kind of, it's just not a lot. It's slightly better than a Wanda, which is 50 to 1. So not really worth your time. Having said that, the odd, I mean, unless your stop loss was, how many pips was your stop loss? So if you got in some around here, would you have like a 10 pip stop loss?
No, I had it at like 69. I think it was 0.69445 or something like that. It was like at the 69 something, so it was it was up above the dots. So it was high enough, I thought.
Huh. Well, again, so something that we talk about quite often is that most people's entries aren't horrible, their management is, and that's just my professional opinion. Their decision, their original decision isn't nearly as bad as they're second guessing it and emotionally and psychologically destroying that decision for the next however many minutes and hours they're in that trade. That's kind of my opinion, though, in all fairness. You, odds are, got knocked out by the widening of the spread, which FX Choice isn't that big. So I don't think it could have been here, but I don't know what I don't know. And
Mhm.
as if it was in the last 15 minutes to the last 30 minutes, this is the closest it's come. So if I had taken that trade, I still wouldn't be knocked out. I would have probably trimmed some profit at that 10 pip-ish mark, and I still wouldn't be knocked out. I would still be active in this trade.
Right. And that's what I couldn't understand how I got knocked out. But when I looked at it, the 4-hour time frame, it had actually knocked it out at 4 hour. That's why I was kind of wondering that because it got me confused. I was like, so now do I need to set it based on the 4 hours? Because right now I really don't know because I wasn't trying to keep it long. I was trying to, but that's what it did.
Huh. Okay, I can't help you there. I can just tell you that the time frame you set your stop loss is probably not the issue.
Mhm.
It's, I mean, I can't say for sure, but I'm pretty sure that's not the issue. So the odds are maybe there was a mistype in the number. That's potential that you accidentally dragged or dropped it. The spread opened up because, I mean, brokers can vary from broker to broker, but
Mhm.
it's not going to vary, from here to here. It's very unlikely that will happen, like immensely unlikely. Like that broker wouldn't be in business very long. It would be shut down.
So what would you recommend then for the shorter time frames? How would you recommend trading those, like the 15 and the 30-minute, especially based on what you said with what's going on? And I get that too. I really like the shorter ones. I just don't know how to effectively trade the shorter time frames.
So on any time frame, so I don't care if you're trading on the day, the week, the month, the year, the 1 minute, the 5 minute, best practice, not the easiest. I said best practice is if I took the signal based off of whatever strategy, my stop loss should be at the most recent low. If I took this signal based off of any strategy, my stop loss should be off of the previous high. Because here's the reality, this buy is still valid, even if it consolidates for a month until it makes a lower low. This sell is still valid, even if it consolidates for a month or a week or 3 days, unless it makes a higher high. It is still valid. Your job is to hold it, poker face, trust your analysis, and wait for the market to do what it's supposed to do. You won't always be right. But the hardest thing to do is to control your emotions and your actions in between here, like we talked about on NZD USD. I'll go back to that pair real quick. That whole week that was just kind of a mess and consolidating, that's the hardest thing to do, is to sit through that. Oh, there we go. I knew better. Let's pull that up. This is a 15-minute time frame. I'm pretty sure it's right. So we took, it was whatever. Let's say this one. No, kind of bought, we stayed in this zone for quite a while, but it was right. It was right this whole time, but it just really plays in this zone. The hardest thing to do is to hold it through multiple days and nights and go to sleep without stressing, without freaking, without wondering, but to trust your system and to say, hey, I'm either in profit or I hit my stop loss. I'm either trimming profit or I hit my exit rules, but I am not supposed to micromanage this trade. I took my analysis based off of my rules. They were met. I trust them. And I know kind of exactly what to expect. It's either going to hit my stop loss, which is a calculated risk. So we freak out about our stop loss, but that in theory should be a calculated risk. It shouldn't be something we're afraid of. It's a calculated decision we took to take the trade. So we decided to stay in it. We're managing it. We're have managers on it or whatever the case may be, but our job is to hold it until it hits our take profit or it hits our target or whatever it is. However, we're kind of figuring out our rules for that. Or that's it. Like, this is the hardest part of trading, is this zone right here. This one's even a trending one, in all fairness. There's much worse ones than that. Much, much worse. Like 1,000 times worse. But does that help a little bit? Like, and for future reference, if you go to your trade history and drag and drop it on the chart, you'll get a nice little tiny arrow of where you entered and a nice little tiny arrow of where you exited. And if you right click, well, here, there's nothing in this account. Oh, this account is, I just set it up for this call. But so account history, if I dragged and drop a trade on here and I right click down here, I'm going to show comments. The comments will tell me exactly what closed it. So if it was a stop loss or a manager or how it closed. So you might have manually closed it. I don't know for sure, but something clearly happened.
Okay.
So that's something you should be doing every week. Every Friday, you should be going over your trades and kind of reevaluating.
Okay. All right.
All right. Awesome.
Thank
All right.
you.
Annie, you're welcome. Thank you so much for coming out. All right. Thank you, Rocklin. I so agree. Like, that's the hardest part. Like, seriously, it's a big deal for reals. Any other questions, comments, or pairs in terms of simplicity? Is there anything I can help you guys with in terms of using the system, understanding the system? Remember, it is a counter trend system, so you have to trade it accordingly, which means you need to trade it more confirmed. At least for me, for my way of trading, is you need some structural evidence or you need to skip it. That's
Hi, Jenny. How you doing?
wonderful. And yourself?
I'm doing great. This is Eric. I have it's more of a comment / question for you. It's involved in Forex, but I've been actually coming to these trainings for about a week now. This is like my second week. Well, my second week. And I see the passion in Mr. Pat's voice. And I just want to know from you, because you all give some powerful information. And I know it's not about the money. I just would like to know what drives you to do these classes the way you do them.
Oh, wow.
I stick her up, make
Oh.
her come at gunpoint.
Garrett does. I've got a ton of people who have threatened my life, by power of death. But other than that, to be transparent, I'm super blessed. God's been very good to me. I am a mother. I am a single mother, so I'm at home. I, have that family lifestyle and that dynamic where it's morning breakfast and kids, different directions and that sort of thing. And I've always really loved business. So I don't really have the passion or the want to start another independent business, although I'm constantly approached to do so. But I got pretty good at this, and on accident, actually. I didn't start off wanting to coach or to trade. I helped out with Pat. I even have some call called Maybe This, or sort of, kind of, something that's very Jenny Speak-ish. And a lot of people responded well, and a lot of people felt a connection to my voice or felt heard. And Pat he was very encouraging and very on it, saying that I had that gift and that ability to speak, and people heard me, and that when I spoke, people heard me, or the ability to relate to people or whatever. So it's a chance for me to give back. And I'm not going to say it's always easy because it's not. I mean, this morning in the advanced group, we talked about a fractal break strategy, which anybody I've taught it to knows it's probably the easiest of all my strategies. But sometimes when I'm teaching it, it feels maybe like it's not as easily received. But the idea is just to give back and to, if I can help 10 people change their life, and I don't mean just me in a Maserati, I mean like, hey, you know, you volunteered, you donated 20 grand, you helped your mother. Maybe your mother needed help and maybe you got out of debt. Maybe finally you bought your first house. Maybe it's not about the Gucci belt, which everyone wants to promote in this industry, which we all know is nice. But I'm not about that. I'm more about, hey, grab some rental properties, live a pretty good life, maybe travel the world and get some experiences and be a good person. Give back where you can. So I don't know if that answers your question, but it's a blessing to be here. I'm trading anyways, and it's cool to hang out because I'm gonna be in front of my charts anyway, so I may as well be chilling with you guys, talking about, you know, Alik was weird vegan Megan menu and Derek's really interesting trips to Bangladesh and whatever. So it's awesome to have a group of like-minded, driven, empowering, just gifted people, gifted in different ways, and I mean like in their personality and who they are, and it's just awesome. So I don't know if that's what you were looking to hear, but that's my answer. So that's it.
All I can say is we're blessed to have Jenny. I've
Oh,
been through many
Yes,
of
we
them,
are.
and I ran across a lot of Cadillac salesmen. Nothing against Cadillacs, never had one, but I've heard a lot of people talk a lot of game, and they flashing this, flashing that, and it's a blessing to be here with Jenny. That's all I can say. And Scott and Catherine, Special K. We're very fortunate.
oh
Yeah,
yeah.
Jenny is our Moses.
That's like blasphemy. I'm pretty darn sure, guys.
We
all
Why she
love
moved to
Jenny.
Florida, huh?
Uh-huh. You guys all should come to Florida. Like if I'm gonna be here, first off, sweating my butt off, y'all should be down here too. There's beaches and there's sunshine, a lot of it from what I can tell so far. Cost of living's cheap and no state taxes. So like for us business owners, I'm just saying you keep I paid a lot less taxes this year than I have in the last 10. Like a whole bunch less. So
Oh wow.
and I'm here too. That's worth a lot.
That's
Just
what we
pack up and move to Florida.
Uh-huh. Oh yeah.
Jenny, I did have a quick question too. I was on the class this morning. I think I was the one that said I think I was in elementary school and you was teaching at a collegiate level. Should I stay here for a while in the beginning course before I kind of graduate to that advanced class you had this morning? Because I want to get it. I'm keeping up with you a little bit, but you know, that was a lot this morning for me anyway, being new.
Yeah, I got a ton of messages about that. So that is an advanced group. My advice to you is something I learned when I was, you know, this really, I'm going to use the word negatively, but dumb little girl, right, in business. And I was dumb. I was just didn't know a thing, but I had big goals and big dreams. The more you hang out with like-minded people, the more you converse, your learning curve is going to grow exponentially. Now, I'm not going to say it's easy because it's not. I mean, you're going to ask questions that other people kind of hear as we have a great people in that group. Let me say that first off. Most people in that group are very understanding, very compassionate to the person who doesn't know how to set up a chart. But there are people who are going to be like, gosh, come on, we got to get past that. But what I would do, so I can't say what's right for you. I can just say what I would do is I put myself in a position to be uncomfortable, to lean into the uncomfortable, to lean into difficult, because it's just going to excel your learning curve exponentially. So if you stay in a place where you never discuss candles and you never discuss an ATR and the Scott's, oh my gosh, specific 30-minute discussion of what a pip point is, okay? Like if you're not doing that, you're going to grow at a different pace. So it's going to be a lot, but as you can see, we also we hang out, we connect on a friendly level, and if it were me, I can't say what's right for you, but if it were me, I'd say stay and go the distance. And that means it's up to you to take the decision to grow quickly and to learn as much as you can. But that's stuff that you're not going to learn. Baby Pips will teach you some, Pat will teach you some, Google and YouTube will teach you some, but there is nothing like human connection, interpersonal relationships, consistent dialogue, especially where you're capable and able and encouraged to participate. There's no amount of coaching you can pay for on the side. I don't care how many people are willing to take your money, that is worth having somebody, yes, like me, but also Scott and Catherine and Barbara and Donna and the whole group of people like Derek to come and look at this and say, okay, let's drag and drop your entries. There's nothing you can pay for that will get that level of connection and mentorship. So if I had the choice and I had the chance to do this years and years ago and didn't have to go through 12-hour classes with 12 hours worth of different classes that were just dynamically different and no actual dialogue, no actual ability to ask any valid trader a single question, I didn't have opportunity to do that. So I ended up paying a bunch of dumb things and dumb amounts of money for the wrong reasons. So that's my answer is if it were me, I'd say stay. But just know it's going to be, you're going to have to catch up. It's no different than jumping to college when you're in 9th grade, but it's possible. People do it. So you have to decide if you're going to be the person who does it and no bad feelings if you're the person who says, hey, my brain needs to breathe. We won't judge you, I promise. If you need help with what's a candlestick, or if you need help with, I promise I tried to get that indicator on, but it does not work. Especially me, annoyingly so, I will be patient with you because I've been there, which I didn't know how to even use MT4 at all. I thought that I was never going to figure out MT4 because it was the worst possible design program on the planet at the time I learned about it. It's
And
still
then
not
she
as good.
realized, and then she realized she was on the Mac, and that was the problem.
Actually, I think I was on Windows at that time, Derek, just so you know.
I think it's a good idea to stay because I completely get where I'm sorry I didn't catch your name, but I completely get where you're coming from in terms of it feels so advanced and it sounds so advanced because I do that too. I sit there and I'm like, so many words, so many syllables. Okay, all right, yeah, we're going with this. But I think that even when you don't understand, for me personally, I like to still listen because I think a trick comes in when things actually start to click. Like, when you first look at a chart and you first hear a whole lot of terminology being thrown around, it's very confusing and it's very easy to just be like, oh, this is way too much. And then as you do your own practice and then as you also do your own research and studying, eventually someone's going to say something and it'll be like, oh, okay, that actually does make sense. That's how I felt with fractals this morning, where I was like, okay, theoretically, I get it. It's lines and you draw them from here to here. And once it elaborated a little bit more, it was, oh, okay, this is now starting to piece together. So I think that it's a good suggestion to still listen, even if it is confusing, and still join in and just, like she said, kind of lean into the uncomfortableness because I think it helps. I know everyone's different. It's very easy to just be like, oh, when I master it, then I'll come into the class. But I think if you already master it, it's sort of like, well, why would you still need the class, so to speak?
That's a good point. But plus, like, my biggest thing is, how are you going to master it if you're not around any masters? If you have no one to bounce ideas off of. So most people who want to pay for coaching, they don't necessarily want to pay for coaching. They want to pay for someone to analyze what they're doing and or to bounce their thought processes. And hey, when the candle does this, what about this kind of thing? But you have that. Now it takes some oomph to get out on a live call in front of other people and actually verbalize that. But once you get the courage to verbalize that, there's no better, I'm sure there's 1,000 people a bajillion times better than me in about 1,000 ways, but there's no other group that I know of that has that many amazing people who can chime in and say, well, I see it this way. Well, here, this could mean this, and really kind of feed into you, breathe life into you. So that's, I think, the biggest value of that group. So it's a lot though. And hey, for those of you who are in there this morning, if you're going to stick with any one strategy, stick with that fractal break strategy. It's by far the easiest. Seriously. Like once you know it, you know it. There's not a whole bunch of second guessing. Like it seriously isn't. So seriously. But all right, Donna, are you there? I know you got kicked off with some internet nonsense. Raining because Texas is funny. Donna, are you there? Let's see. She might be, but knowing her, she lives in the middle of, you know, no internetville. So I was going to say, does anybody have any questions, comments?
Hey, Johnny.
Hey, Woody.
Hello.
Hi, Brent.
Hey, good night.
Good.
Well, it's night by me, it's morning by you. I have a question regarding, you set your trend to 11, right?
Yes.
Now, is it because just of a faster entry, or is it more accuracy in accomplishing your PIP goal?
So because this is a reversal trend, so the problem with taking a late entry on a counter trend system, your accuracy has to be pinpoint, right? So the
Right.
fast entry is gonna help me achieve my PIP goal faster, right? In theory, but you're gonna get more inaccuracies. So that is a factor you have to consider. You will get more inaccuracies. There's no way around it.
Right, because I have mine set on 20, and the trades that I enter, they all start off good, and then I'm deep in drawdown. So back to the first question that you were answering on the call, is it that we hold the trade? That's the predicament that I'm in, you know. So I'm wondering, am I getting in too late?
If you have it set at 20, the odds are you're getting in, and I can't say for certain, but the odds are you're going to get that signal like here, or you're going to get at the tip top of here, which
Right.
always means a pullback. And a pullback isn't something to fear. It just needs to be calculated into your risk. So if I got
Right.
this, let's say I got a sell signal here, technically it's right, but I have to withstand this drawdown, and that is mentally and emotionally expensive. That's a burden.
Yes, it is. Yes, it is, because I didn't bother to go on a demo account with this simplicity. So
Neither did
everything is live. So, you know, I'm kind of testing 20, 10, and other things to get the precise entry so that if I'm shooting for 20 pips, I don't enter at the end of the 20 pips before going into drawdown. So,
Okay, so let's
all
just
right.
what you're doing. What time frame are you using, Brent?
So that's another issue. I started off with the 30 minutes and between 30 and 50 minutes. So let's say 50 minutes.
Okay, well, let's say which one are you doing? So let's say the one that you're doing, 15 or 30.
Yeah, 50. Sorry.
Okay, so you're on the 15-minute. And what is your risk to reward? So where are you setting your stop? Where are you setting your take profit? What's your
Right.
what are your
So
rules?
right. So normally I'll trade within the zones. So let's say we're going long. I'll set my stop loss behind the zone.
Okay, so if let's say we took this, oh man, we already know what this, I'm gonna use it. This. Okay. So let's say we entered somewhere in this zone. Okay, we get a signal to buy. Do you know how to use the annotation tool on Zoom?
Yes. Well, no, sorry. I thought you were talking about another trade.
So no. So where would you put your stop loss? Like here
Yes.
or here
All right, hold on. Somebody sent me.
or here?
I will put it behind the previous low.
Two, so 3.
Yeah.
Okay, so your stop loss is here. You entered here. I'm gonna draw another box that's probably more sustainable.
Yeah.
My stop
So
loss
it's right.
Okay.
Correct. Yeah.
And what's your take profit? Are you just measuring the stop loss and going for a 2-to-1 or?
Well, actually, I'm just going for a 1-to-1 initially, but I don't ever get to the 1-to-1 before it reverses.
So you get scared and get out?
Not well, a couple of times, yes. So I left the trade. So right now I'm in a couple of trades, and they started off pretty well, but I'm in drawdown right at this point in time. So I'm just gonna leave it, let it run. If it hits my stop loss, then okay. If it doesn't, well, so I'm just gonna leave it.
Okay, so if I took this trade, I have to use the annotate because I guess I could do this. Let's try that. Here we go. So let's say I entered exactly on this candle. So
Right.
that candle and this candle. Okay. Come on, baby. Got it. So I entered at that mark. So I've got my vertical and my, that's never going to work. Sorry, guys. Look, this never comes down to make a lower low. So we never get knocked out based off of our stop loss. It never.
Correct.
Here it is. So in theory, I should not have hit my stop loss. But if I had taken that trade, okay, I mean, I'm either going to measure this move. So say, okay, so my risk is here. So I want to go for at least a 1-to-1. That's a 33 pip. You got to factor in the spread, right?
Mhm.
So the 33 pip move is still only, it's only this much of the move. Okay, so even if I give a little extra for a spread, this moved 2 times as much, if not more, right?
Right.
As much. But if you micromanaged it and you freaked out and you closed it based off of your emotions and no valid reason, okay, if you closed it based off of your feelings and it did not make a lower low, okay,
Right.
you can have rules that say I get out if it crosses the 50. You can have that rule. That's not a rule that I disagree with. It's actually one that expects in today's market. I'm kind
Right.
of that. But it also means you have to have the ability to get back in, and this is where people struggle. So they got in,
Right.
they took a little L, not a huge L, but a little L nonetheless. You
Right.
have to get back in.
Well, for the most part, I micromanage my trades. So I keep looking at it, you know, freak out a bit, and I will wait for it to get into profit and then I'll exit it, only to go back and realize it went 50, 70 pips. So I think I just have to leave. You know, I think I'm just going to leave it, but I'll probably set my trend a little lower so I can get in a little earlier.
Well, can I say something real quick, Jenny?
Sure.
Really, come on out.
One of the things Pat always say is what the market always have to take a breath.
Correct. Yeah.
He always say that. So right where that top blue box is, where you would have got into your entry, right?
Yeah.
And Jenny said it exactly right. It's never going to make another lower low. So the patient part is, okay, the train is, it looked like it's leaving the station. So what you want to do or work towards putting in your buy order and let the market come back down to you. That way you're not in drawdown all the way from the top part of where you would have taken. Now, if the train continues to leave the station, then that's just a trade that you're not going to get into. So
Right.
you want the, and Pat always say, let the market come back to you. Why? Because it always takes another breath. So if you would have put where that lower is, right there with it, right there, exactly, Jen. If you would have put your buy entry right there, the market would have came back to you. Your drawdown, if it would have drawn down at all, it would have been 5-6 pips, and then
Right.
the trend would have left the station. And how many pips is that, Jenny, going all the way to the top of that? Not from there, from down at the bottom where you just drew the purple circle at the bottom. Now go all the way to the now go all the way to the top of that. Wait, what's the top?
100.
I think that's more than your 20 pips and gone, ain't it?
Correct. Yeah.
Let the market
Okay.
come back to you.
That's good
Okay.
advice.
Yes.
In terms of
Appreciate it.
like orders, you have 2 options. You can also do like that line I drew there. So if you've got background noise, please mute yourself. So you get a signal here. You can put, oh my God.
Hello?
Hold on, I gotta mute
Okay. I wasn't hearing.
all. Not letting me mute all. There you go. Somebody's got some stuff going on, like we don't even need to know. Okay, but in terms of a pending order right here, okay, so you get a signal. Oh, for the love of God, let's erase everything. Initiate, annotate, clear. Lord knows I might not find that spot again. There we go. So we get a buy order. You can also choose to put in a pending order and this would be the late one, but the confirmed, to say, hey, when we break that high, which means you would get in here, or you can wait for the Stairmaster kind of setup, that pullback setup, right? This is probably a fractal, and take the pullback. So those are two pending orders you can do. I don't prefer this one because this one can keep shooting down, but it is the better entry. In all fairness, it's the least amount of risk. I would prefer this one that says, hey, it's now a confirmed move. That's more along the way of how I trade. So you have that option too, to say, hey, I'm going to take it. I got a signal, but now I'm going to wait to see if it makes a higher high. And if it makes a higher high and breaks out above this zone, then I'm going to take it and I'm going to trust it for my 20 or whatever my pips are, 30 to 30, whatever. And you can't micromanage it until you're up 50% of that. So you're not allowed to touch it. You can't drag and drop a stop loss. You can't trim any profit. You can't micromanage that trade or emotionally manage that trade until you're up 50% of it, or some amount of rule-based system. Because if you just go in here all willy-nilly doing 58 different things, you're not going to have anything duplicatable. You need a strategic set of rules that say, I'm going to use simplicity on the 15-minute time frame. This is what I'm going to do. And then go out and get 50 trades doing just that thing. Do nothing but that thing, whatever it is your rules wrote down. So if you have this many confirmations to take the trade, great. If you have this many ways to manage the trade, great. This many ways to stop loss, or this many things you avoid, this is your schedule. You should have a list that looks like that. And then your job, and the difference between me and people who are far better than me and should, in theory, be far further than me, is their big brain out talks them and outthinks them and outfeels them into taking 50 consecutive trades. Like 50 trades using the same rules, win, lose, or draw. So that means even if 100% of the 50 all lost, your job is to follow a set of rules disciplinedly, however you say that, for 50 consecutive trades before you change anything, and then do it again, and then do it again. And by the time you're done, you're going to have this set of trades that, and this set of rules, you're going to know what works, what doesn't work. And then your second guessing is wrong. You've effectively fixed 19 problems in yourself and in your trading plan. That's the purpose of doing that. So
That's why Jenny is our genie in the bottle that comes.
Got you. Appreciate it. I got you.
Thank you, Mr. Genie. Derek said Jenny's going to be a genie or something. I laughed so hard in the chat. I was just laughing. Everyone's a trip.
I said you are our genie that's in the bottle that comes out to give us all the knowledge.
Oh, see, I appreciate you guys. You guys are always a ton of fun.
Hey, Jenny, I have a question.
All right, Freddie, come on out. How are you?
Good. I just joined. Actually, this is my first week, but I'm not a beginner trader, but I haven't gotten to the point of withdrawals. So I think now with you guys, I'll be at that point of being able to get withdrawals, but that's not my question. I was wanting to get information as far as the advanced class. Is it like 2 or 3 times a week, or do you know, is there a certain schedule for it?
Yeah, there's a certain schedule. So right now it's Tuesday and Thursday, 9 a.m. Eastern Standard Time. Every now and then we make it a few extra days or do some competition or something. But for the most part, that is the consistent, count onable, that is the schedule. So that's it.
Okay, awesome. I appreciate that. And I guess is there like a trading plan that you guys work on, or is it just kind of signals? Or?
Well, again, when we say advanced, we mean just more than just Jenny. So it's the dynamic of people. So for example, we've got a coder in there who is constantly talking, and I think that he's, offers quite a bit. He thinks literally the exact same in the exact opposite way as me, I think, if that made any sense. But he can answer like the really odd, exacting kind of things. So we've got just a plethora of different people who see things in a different way from all around the world. We do take live trades. I think that in the last 6 months that we've done that, the vast majority, like I don't want to say exactly, but 80-90% for sure have been like winners. Not every day is a winner. And right now we're pretty much trading NAS, which is high risk. So you have to have the stomach for it, but you can do the same thing on GBP USD. You can use the same strategy that we're using on NAS on GBP USD if you choose to. And then of course we talk about, ideas and candles and structure and different trading plans and strategies is what we're looking to get into. We often get stuck on one for quite a while to teach all the new people, which is okay. Right now we're working on, Scott is actually releasing a trade manager, which is immensely difficult, but life-changingly worth it. Because again, if your entries are good and you need help with management, then that is literally like the answer to everything. So it's kind of awesome. I think that answers your question.
Yes, that does answer my question. I definitely appreciate it.
Thank you. And welcome to the team. I super appreciate you being here.
Yeah, no problem. Thank you.
Yes, sir. All right.
Hi, Jenny. Hi, everyone. I have a question. What is the market zone period, and is it wise to change it?
So let's go to, now oh, wait, this is now the same as y'all's version. So I forgot that. So this is the same as y'all's version only because I had to get it, which is not fun. Having said that, my trend period, is that the same thing? Well, the market,
No, it has, yeah, that. Is it wise to change that, or how does it benefit with the indicator?
it's not going to change your buy signals. It's not going to change your smiley faces. It's only going to change your hot zones. So essentially what this is the 100% high and low Fibonacci ratio of the 4-hour time. That's all this box is telling you. So it's hot zones. So you can have it slightly tighter, but this is, for me and my way of trading, like you could take it off. It doesn't matter. It has no matter, none.
Oh, okay. Okay. Thank you.
You are welcome. Paul, is that okay? With the doggy, the very loud doggy. Has Brent, y'all had your hands raised? And then there you go, Has. We're kind of informal here. We're not.
Answered my question, Jenny. Thanks.
You're welcome. Just checking in on you, Brent. We answered your question.
Thanks. Yes.
I'm awesome. I'm gonna lower your hand. I'm gonna lower your hand. I'm gonna mute you. There you go. All right, guys. I think that is enough time for tonight. Unless anybody has anything else super important that they would like to kind of go over. I know that Jeff, we need to go over some naked charting because I gave my word. So we're gonna have to do that next Tuesday and maybe skip a little bit of the simplicity for a little while. If you guys would like to look for live trades, I don't really think Asian is a great time to look for live trades for simplicity, but we definitely can, or whatever you guys need on the Tuesday night call, just let me know and we'll go over it to the best of our ability. Anything goes. No question is too dumb. It's here to get past all the tiniest and tiniest of things. So anything.
Okay, Jenny, really quick, thank you so much. This is my first time here. I just got the license maybe yesterday, day before yesterday. I want to begin demo trading. So what's the one thing that you would leave me with to end tonight's session? And thank you for all that you do, you and everyone else here. I love the energy, grateful to be part of it. So what would be that one thing?
One thing would be a trading plan. Like there's nothing better. There's nothing.
And following the simplicity would be the one for me, being able, beginning the demo trade part. Just following the simplicity rules should suffice for now. Yes?
Yeah, well, the simplicity rules, but you need to see that, Tom. So Jenny can tell you something, Pat can tell you something, the guy next door can tell you something, but the thing is, your eyes need to see it. So just because I tell you, you need to see an engulfing candle, you need to see a break of the trend line. If Pat tells you the down, simplicity trend surfer needs to say X, Y, and Z, you have to, and I mean this with the most of my love, like you have to comprehend it. So I know that there's a set of rules on the website. I found that today on total accident, but that teaches you kind of how Pat is recommending to use this. I would say use all of that stuff, but also take, you have to draw a trend line. Like you have to have some idea of what structure is. So don't just take every signal. So if we're not making lower lows, don't just take every signal all willy-nilly.
Gotcha.
I would say you need a trade plan. So what that means is I'm going to follow X, Y, and Z rules on X, Y, and Z time frame. Okay. I'm going to take at least 50 trades. My stop loss is always going to be, for example, the current high. I will never take less than a 1-to-1 risk to reward ratio. So that means if you have some weird giant candle like this, sometimes it might mean that you have to skip that trade because that's part of your trading rules.
Gotcha.
This is what makes you a better trader. So something along those lines, something along the lines that says, I, Tom, will not micromanage my trades. I will not feel and psychologically and emotionally second guess myself. I'm not allowed to touch it until I'm 50%, or maybe your rules are 10 pips. So if your rules say I'm allowed to take off, a portion of my trade at 10 pips, then at 10 pips, I can move my stop loss to break even and I can, trim a portion off. But your rules should be so specific that it leaves nothing to chance. And then follow those rules for 50 trades.
Gotcha. Thank you so much.
You are welcome. And thank you for being here. Welcome. Enjoy that license. I guess a lot of people are still in and out of that license topic. So good job on you.
No, I mean the license to put it on the indicator on the MT4.
That is what I meant too.
Okay. And one more question that's really been dogging my mind. I cannot find gold USD. Am I missing something here?
Probably. So this is gold. What broker are you on?
Forex.com.
Okay, so I don't know what it's called on that broker, but in general, it should be XAU USD. If I right click and go to symbols, in general, okay, it should be under, well, this one has it's under its own, but a lot of times it's under metals. Sometimes it's under commodities, or like they do have a couple different names. I can't say what your name is, but this is what the symbol looks like. And if you ever can't find a certain symbol, but you know the value, gold right now is at 1770 or give or take. So when you find a symbol that's in and around that and you right click on it or just drag your mouse over it, a lot of times it will tell you what it is. Of course, it's not doing it on this broker. Go figure.
There you go.
There you go.
Okay. Thanks, Brandon.
You're welcome. You're welcome. Only on their platform, not MT4. See, I don't know much about that. Oh, you cannot trade gold on forex.com, MT4, or whatever.
That's why I can't find it. Thanks, guys.
You're welcome. There is a list of like recommended brokers. Maybe I can have Miss Donna post them in the chat. AFX has great leverage and instant withdrawals. So like when you want your money, it's in your bank account like today. Well, not your bank account, but it's transferred from Bitcoin to PayPal to your bank account in, hours. But they have great leverage. So when your accuracy is good, it's great. Spread is high, great for swing trading, but the spread is high, so not great for scalping. Hugo's Way has great customer service, good leverage, and good swap fees, and good in general kind of fees, and reasonably good. But yes, always consistent withdrawals. CoinX just has great spreads, and it's someone I've been with long enough. I've never done anything wrong, but I like them enough to stay. So that's why. But there are links for all of those. Okay.
Thank you so much.
You are welcome. All right, guys. Well, that's enough for tonight. Thank you, everybody who came. I know there's a lot of new people in the group, so we really wanted to slow it down and get the new indicator up. I know that some people are still having issues with the license. If you are, be patient. You will get it. They had to update the website and a whole bunch of other mumbo jumbo that is out of my league. So just be patient. In between now and then, continue to use the triple arrow system. Continue to study baby pips. Go to YouTube, practice everything. And I look forward to hearing you guys in the chat and seeing you guys real soon. Thank you all. Have a great night.